Here's the deal. I don't know if you guys ever done this at the gym before where you just literally just hang on the bar. You don't do any pull-ups or anything. You just hang and you just like, how long can I hang for? 30 seconds, 45 seconds, a minute, 2 minutes, before I just my arms are going to fall off. I need to drop down, right? This is our economy right now. Our economy is hanging on that bar, and it's just a question of how long until we hit the floor. That's all the question is now at this point in time. There's no question, are we going to hit the floor? The question is, we're going to hit the floor. And how long does it take to get there, right? Are we going to hit the floor in 3 months from now, 6 months from now, 9 months from now, a year from now, 18 months from now? That's the whole question. So at the end of the day, the economy is going to hit the floor. We're going to get into trouble. It's always played out this way. It's never not played out this way. And the Fed will end up lowering Fed funds rate. And interest rates will drop back down substantially again, okay? The only question is, when does it happen? That's the only question, folks. Not when. Not if, it's just when, okay? So when the Fed drops rates back down, I can tell you it's going to be a flood, like you've never seen, a flood of money into dividend stocks again. And that's going to be a crazy, crazy time period because you could have economic data that's very weak and dividend stocks that are holding up very well and some that are even, let's just call flying in the face of a situation where you have an economy that's actually deteriorating massively, which is very intriguing. Because I can tell you, all this money is going to be looking out there and they're going to be saying, okay, I need to get yield. Where do I get yield? Well, if all of a sudden your savings accounts aren't yielding crap again, your CD accounts and your treasuries, next thing you know, you go to dividend stocks, okay? And that's where the flood comes in. So this is where I'm getting ahead of that. I want to get ahead of that. Just as I got ahead of the whole growth stock, pile in this year, right? I haven't even been putting much money in growth stocks this year because I got in already last year. I took advantage of the deals. I beat everybody to it, right? So this year, I'm going to beat everybody to these dividend stock opportunities again. And then when the flood happens and everybody starts piling back into dividend stocks, I'm already going to be in them, sitting back and just watching the stock prices go up and saying, hey, welcome in new shareholders. I'm glad you guys are enjoying this, okay? Now, in regards to dividend stocks, I've been in the market 15 years. I've only seen dividend stocks cheap 3 times, okay? 3 time periods. One was when I first got in the market in 08, 09. Dividend stocks were very cheap then. That was a time period where the whole market had sold off massively. You had all the indexes peak to trough from where they were in 07 to where they were at the beginning of 09, which beginning of 09, I'm really talking about February, March. They all fell 50%. Peak to trough. Every one of the indexes, S&P 500, Dow, Russell, NASDAQ, all 4 of the big dogs all fell 50% peak to trough, okay? So, 08, 09, everything was cheap. Growth stocks, dividend stocks, it didn't matter what you wanted to buy. Everything was cheap, but certainly that was a time period when, dividend stocks were super cheap. The other time period I got to take advantage of this one was the first half of 2020, basically from the beginning of the year all the way through into the beginning of summer of 2020. Dividend stocks were extremely cheap. Obviously you had the market crash there, and then a lot of people were uncertain about when the economy was going to open up again. Retailers were trading very cheap. Restaurants were trading very cheap. A company like Tapestry that I was buying back then was yielding. Oh gosh, the Tapestry yield was insane when I was buying it. I think it was it was either a 6 or 7% yield, something insane for Tapestry TPR at that time, because people were very uncertain about what's going to happen with the reopening. Are people going to buy stuff again? Coach bags and whatever, right? And so what a time period that was. In the second half of 2023, this is the only other time I've seen dividend stocks super cheap. And when I say super cheap, I'm talking about just at P ratios that you're just like, forward P ratios, you're just like, this is silly. Dividend yields that you're just like, this is ridiculous. 3 time periods in 15 years, folks, okay? And so how long do they stay cheap? Who knows? Maybe it's a few months. Maybe it's a year. I don't know. All I'm going to say is the next 3 to 6 months, this is where my focus is going to be in this market, because I can tell you it's not going to stay like this forever. And then we'll be looking back at this time period and be like, dang, man, should have been buying all those cheap dividend stocks, like delusion. That's what's going on in this market right now. And it's probably going to go on maybe for another few months. And so I'll be taking advantage of every deal I can possibly get. One thing I know is I'm not going to time the bottom perfectly. And so I just need to be buying the whole time period. And so dividend stocks, here we come, baby. It's going to be a fun little time period here. A lot of people are looking at this recently, okay? So if you were in the market the past few years, you experienced the 2021 highs, the blow-off top situation coming out of the Rona crash, right? 2020 into 2021, and then we had the vicious, obviously, drop in 2022, and then we've had this, insane kind of comeback this year, specifically in the first half of the year for the market overall, right? But, and we'll zoom in on this in just a moment, this is a very similar phenomenon to what we had in 2008, where we had kind of a blow-off top into a big drop, into a recovery where the recovery did not get back to where we previously were. And then we had an epic drop from there, an absolutely vicious drop where things just got worse and worse and worse and worse and worse, while the government said it would not get worse. The Federal Reserve said it would not get worse. We weren't going to have a recession, nothing like that, right? The President of the United States said that. And boy, did it get bad, and boy, did it get bad fast. In a matter of 12-month span, things deteriorated so much more quickly than really anybody had anticipated, right? And so people are wondering, are we about to have this sort of drop, okay? Now, let's zoom in on what happened back in 2008, okay? So we had the blow-off top, and that could be seen as kind of like what we had in 2021, right? Now, then we had a major drop. This could be seen as kind of like what happened in 2022 in the stock market. In, kind of 07 into 08, it wasn't quite as bad as it was in 2022. We actually had even a bigger drop in 2022, believe it or not, than what we did in kind of this 07, mid 07 to early 08 time. Then you had a comeback in early 08, okay? And things were looking pretty good. A lot of people were like, oh, this recession talk, this is overblown. We're not going to have this recession. We're going to be just fine, right? And this could be seen as our first half of 2023, right? Where a lot of folks are kind of like, it looks okay out there. I think we'll be fine. And the market just kind of went up in almost a straight line, very similar to what we've had in the first half of 2023, right? Then we had the first inning drop, right? Little comeback. And then we had just viciousness for the next 9 to 12 months. Absolutely brutal market for that next 9 to 12 months, right? Where the indexes just fell off a cliff nonetheless, right? And so this is a very similar parallel that people are drawing to what we're going through recently in the market, where, it's looking great, then it's looking horrible, then people are like, oh no, consumer's fine, we're not going to have a recession, everything's going to be okay. And then suddenly you get a massive drop, and are we at the beginning innings of that, right? So, I want to say this first off, okay? We're in a bad situation, a very bad situation for a potential of any sort of major recession. And the reason we're in such a bad situation is S&P 500 large caps are trading actually very rich compared upon historical standards right now. It's another situation you want to see. Even in the 07 into the 08 crash, we did not have large caps trading up where these stocks are trading at right now. Back in 07 into kind of 08, you were trading at roughly like 15 times, 14 times on S&P 500 large caps, right? Recently, we've been trading 18, 20. That's not an ideal situation. I can tell you that with the risk we have out there in the market, right? Small caps, mid caps, those have been kind of trading in undervalued ranges for honestly probably about 2 years now at this point in time. It's been a while. But let's not fool ourselves. Mid caps and small caps don't matter to the overall stock market, to the indexes. Large caps are what matters to the overall market and indexes. So if we're talking about a major recession that really hurts these sorts of companies in any substantial way, when they're trading at very rich valuations, that could mean a substantial amount of pain for the indexes. It's just a question of, is it a 30% pain, 20% pain, 40, 50, or 60% pain for the indexes overall, right?